Tuesday, August 6th, market analysis, Stan Ehrlich. Good morning. 10:05 California time. We have a bounce on the E-mini. Yeah, it's about time. But we did get oversold yesterday for the first time, well, actually since last April. And we did, in some cases, hit support levels, not necessarily on the E-mini September futures contract, but no surprise we're bouncing. Well, how far up are we going to bounce? I think right around 5,400, another 80 or so higher, which if you look at this daily data chart, looks pretty normal to me. Stopping maybe at 54.40, 30, and turning down to new lows for the trend. We've done a lot of damage to the intermediate term trend, and I'm not saying it's a bear market by any means, period. I do expect this to come down into the October lows. Last couple of years have been great. I hope that doesn't jinx this year. But that's the expectation. And I'm looking for a test of this green zone down here for the October lows area around, I don't know, 4,900. And it could even be lower than that. Frankly, now that we've come down this much, this fast in only 3 days, huge break in 3 days, and broke lows for months, I think my support area in the green zone might be too high, but we'll tackle that later. Right now, we're looking for a bounce and then turning around on the downside. Short-term chart, E-mini, September futures, 15-minute chart. Breaking minor little resistance that developed during the day and last night, the earlier part of the session, and giving a little more fuel to the fire that we could bounce up into this green yellow zone, which is again 5415-ish, 5400, and a little bit higher, especially if he does it in the next day or two, maybe three. I think that's going to be it. I'm going to turn down. Next, Spider. Unbelievably, the head and shoulder top formation of the Spider with a slightly downward slanted neckline broke out last Thursday with a downside classic breakaway gap below a support area that it was proving to be pretty good. But when support is broken, you expect it to follow through down, and that's exactly what it did. And so on Monday, it dropped like a rock again, reaching unbelievably my minimum downside objective in 2 days. The low yesterday was down to this 510 level. I don't know what the exact low was yesterday. The exact low yesterday was 510.27. Good enough for, it's good enough, period. Now, gaps to close on the way back up. Could go all the way to the neckline. Looks like there's a possibility of that because resistance is even a little bit above the neckline. So I'm looking for a further rally, just like I said on the previous symbol, E-mini, and stalling out just under the neckline, I think, and then new lows again, of course. Green zone, let's call it 475 down to 466, and maybe even lower. Next, 1 minute Spider trying to close that big gap yesterday morning, not quite finishing the job yet. That's certainly one of the first spots I'd look for it to stop rallying. Gap closures. All I can expect is a little bit more rally, maybe 1, 2, 3 days, and then down again, possibly back up to my yellow zone here. Next, we have oversold conditions on the QQQ, gap down market, and the gap is closed on the QQQ. Remember, the Qs have been leading the way down and up for maybe a year or two now. They've been going up quicker, better, faster, holding rallies better, higher. Breakouts seem to be more significant, classical, active, moving quicker, etc. Qs are just doing a better job of these technical formations and situations than the other indexes in my judgment in the last couple of years. So it continues. It came up and closed the gap first. And then there's another potential gap up in here, 55, let's call it 456. Possible, but my yellow zone is a little lower than that. and we're already up into it quite a bit. So I can't rule that out. And then I've got a little resistance level at 460 and 3/4. But any one of these could stop it, turn it down to new lows. I expect maybe this week, but probably next week. Next, QQQ, short term, rallying, 1 minute chart, slight new highs, chewing its way up, has now closed the gap. I showed you that on the daily. So this is the detail. A little bit more strength into the yellow, and then kaboom. NASDAQ futures, minor new high, higher than yesterday's high. Nice, but no bullish engulfing. Oversold quite a bit lately. I'm looking for, excuse me, a move probably 18,880. Yeah, right in there, and then turn down. And of course, the short-term 5 minute chart, the trade that we had previously. By the way, I want to point out we had a bearish engulfing ER sell signal on the exact high day of the NASDAQ, July 11th. And I think it's going to stand for a while as the high of the rally. I had warning signs before that worked a little bit, maybe not. No major gain, no major loss. This one was great. And I could have easily slowed down the price, the movement of our yellow SDS stops so that a longer term investor would still be short. But I'm not that style. I'm a swing trader to a scalper, somewhere in that ballpark. Next, NASDAQ. Okay, or this back to the 5 minute. I don't see much more of a rally. That's best I can say. Next, YM Dow Jones. We did get the top of the market to the exact day. And ladies and gentlemen, please notice we got the exact high day, May 20th, and we got the exact high day on April 1st. All three of the significant highs in the YM in the last several months, basically since the beginning of the year, we have had sell signals that have had profound profit potential. This one's a whopper. We did have a short sale. We did have a trade. We lasted about a week and we got out right about, 404, something like that. Okay, and we also got the bottom, the lowest low, and there's only been two significant bottoms, and I got one of them. That's damn good, I have to say. So the YM is responding to my trading strategy, our signals, very nicely so far this year. Reminds me of gold and silver last year, which had fantastic series of buy and sell signals most of the year. Not so much this year so far, except for, you're going to see it in a minute, chart formations are working outstandingly. You got to watch this platinum and silver, and watch out, gold may be starting to head south big time soon as well. Okay, short-term YM, nothing much to say here. And the Russell came up to historical resistance, overbought, turned around, and man alive, big, huge break. Bounced today. I know you can't see the details here. That was on purpose. I would just want to show you the very bigger picture of its last several years. So here it is, bumping against resistance, a sell signal during, unfortunately, at the highest high, during the top. That's not where it's meant to be, but that does happen sometimes. It's a warning of sorts, but the actual signal itself didn't work well enough alone. Oversold, needs a little bounce. I'm not quite sure how much. Don't believe in it. Might even stop at this resistance level, which it almost reached today. Can't come up with a real good level. Next, Russell, short-term 1 minute, and bonds. Now, you would think that while the bonds were rallying very sharply, the expectation rates are going down. That would be good for the stock market. But look what happened to the stock market while bonds were rallying sharply. It crashed. So there's a juxtaposition or a reverse situation that has developed. Now bonds are going down, and I'm talking small short-term rally in the rate indexes. But I have something else to show you that's very important. I just realized it. I probably should have recognized this before, but giant head and shoulder bottom in 10-year notes and bonds. Now, I'm calling it the first shoulder low March of this year. No, I'm sorry, last year, 23rd, 2023. I think the date is exactly March 2nd or 3rd. Then at the bottom of the market, we got an ER buy signal that stands today still as the low of the trend. And we got a buy signal at the very bottom. But if you take measurements from approximately this point in time to the lowest low and the lowest low into the future about the same amount of time, you come up with about right here, the early part of June. Now, granted, the lowest low is another month earlier or more, but we are still rounding out in general, bottoming out in general within a 1 month plus a hair time frame. So this is your first shoulder. That's ahead of the formation. This is the last shoulder low, a little earlier than what you would expect by about a month. But look at this. If you assume the neckline to be what I've just drawn across the highest high after the first shoulder, but before the head, that's it right there, the pivot point, and then the highest high after the head, but before the last shoulder low, and that's it right there. We tested that line exactly the way a head and shoulder bottom should test necklines or could test necklines, have tested necklines, and now again tested neckline. We did get a little bit of a false breakout for a day or two back down below, and now we have a classic major breakout to the upside, big sharp move. This is acting 90% like a legitimate textbook head and shoulder. Shoulder in a little too tight, but it's there. Breakout a little bit funny at first, fuzzy at first, but the big rally here, that's it. Minimum upside objective, let's call it 140. Yep, I'm looking for 140 and higher. This pattern, which has taken a little less than a year to form, no, I'm sorry, a year and a half to form, is big enough, strong enough, bullish enough to be the start of a much longer term bull market that probably will go way, way, way up higher than my 140. 10-year notes, same story, except look at this. Isn't that cute? It had a little head and shoulder bottom as part of the bigger head and shoulder bottom, and it worked great and only took 2 weeks to do it with no problems whatsoever. So the head is a head and shoulder bottom. You know what I'm going to show you in silver and platinum in a minute? Wow, watch this. So here's the first shoulder low. I'm discounting this low. I don't think it's part of the pattern. The timing doesn't work out unless this October, which could happen, we have another big decline, and I can justify a new neckline off of these highs that will probably be a lot flatter, and that pattern would be much, much, much bigger and much, much more bullish. So I'm looking for a low in October, maybe back down to 110, 11, 9. I am not ruling it out. Right now, overbought, pulling back a little bit. Expect a little bit more of a pullback, but the minimum upside objective I'm going to draw in here for you based on the breakout day is, for notes, let's call it 120. And that would be right against some resistance, previous highs here. It may not make it quite to 120. It may make it up to, say, 1921 or something. Yeah, that looks like it fits. So, first leg up, breakout. Second leg down, halfway to the neckline or maybe to the neckline. Somewhere in that zone is typical. And that would put me around 12 and a quarter, 112.08 or something. So keep your eyes on this. Okay, crude oil, not too much to say. A little support. Probably have a little bit more bounce. Looking for new lows for several months. Breaking a trend line would probably, if that happens, dump it all the way back down to 67 of the third and lower. Next. Downside objective has been fulfill on natural gas from a double top formation I measured and forecasted way back, probably in the time frame of about June, late June. Did have a breakout, never did have a test of resistance. It just plain broke out, got oversold, stayed that way, tested support, bounced around a little, false buy signal, couldn't help it go up. Kaboom, done. Now, close to oversold. I'm looking for a bounce, probably back up to 2.3. Next, heating oil. Possible double bottom, way too early to say. That would be the low that was made on June 4th and yesterday for the two lows for the double bottom. Both are at or very close to significant support, which is nice. Both are oversold, which is nice. We just need to start rallying, and we haven't. This is up just hardly. I need to get up at least above today and yesterday's high on a close. Then it's going to be all of a sudden a lot more interesting. And then I'm going to be talking about a move up to 2.4 and a half, maybe even higher than that. I can't rule out 2.6. That'd be interesting. Next. Oh, and if we do get a rally all the way up to new highs since June, then we've got a double bottom formation in the process of breaking out and a much bigger objective, probably 0.3 point something. I have to point out we got a sell signal on the top right there. That's fantastic. Also on this high right there. Next chart. Gold, silver, platinum are topping out. I'm going to start calling this a top formation in gold. It's a big sideways, lots of nothing, but a big sideways trading range. The bearish engulfing that happened last Friday did cause or help cause, whatever you want to think, the break on Monday, and we are following through the downside today. So I'm expecting 2350 to be tested and not hold. When and if that is broken on a closing basis below that, I would then be forecasting 2180. Next chart. Already a head and shoulder top formation starting with the first shoulder in April, then the top of the formation, then the last shoulder. In itself is a small head and shoulder top, unbelievably. 2 days it came down and worked, but that caused the breakout on the bigger formation, which has a minimum downside objective of 2408 and almost made another new low today. Not quite, but it's oversold and toying with support. So it could bounce a little bit and not do any damage to this head and shoulder top development. I am looking for 2405, 08, whatever. And probably, let's say 2, 3 weeks, 4 weeks. Next chart is platinum. Same story, except it's already in a significant support area and just barely oversold today. Wow, real close. So this looks like a perfect place for it to bounce. It's trying, but not very convincingly, up just a squeak. I think it's got enough bounce in it to get back to 958 and then down. My minimum downside objective is 7, or let's call it 808. High grade copper, oversold, trending lower, small bounces one would expect. I don't see anything stopping this trend down. Next, soybeans, soybean oil, meal, corn, wheat, cattle, and hogs. And if I got something to show you in hogs today, so don't leave me. Long-term bear trends still intact in everything but meal. Major downside breakouts weeks ago. Resistance tested on rallies, failed to even get to the resistance area, made new lows again. This rally could be petering out all of a sudden just now, and it's only been a few days. But I can't rule out the possibility of it bouncing all the way back up to 1104, but that's not very likely in my opinion. Next, oil, soybean oil, new lows for the trend down today, oversold still. If we bounce, we're going to try and stop at 4180 and maybe get to 4260, and I can't rule out something like 4416. But those are my three spots. And because of this long-term bearish situation, very, 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 very bearish long-term, I would expect it to stop at the lower level, 4182. We do have something that was a low back in May of 23, a little more than a year ago, that we have as a little support. I should draw in a what's called a ray line. It's just a trend line that has a continuation on one end. And I'll leave that there. Next, meal. refuses to head south. But we got overbought today and we got into a resistance area and couldn't stay there. And we are now down on the day a little bit. If we get below yesterday's lows, we will have a red bearish engulfing sell signal, but we're not there yet. It could, not likely happen. My minimum objective because of this double top formation with the sell signal ER, sell signal red on the second high. It worked great for about a week, and then, sideways, new lows, and the trade was good for about a week. But I'm still looking for this level, then that level to be broken, and for meal to go down similar to beans and oil that we've seen. And here's corn. It broke out to the downside June 28th, over a month ago. Huge long-term breakout. Couldn't rally even on buy signals, but looky here. Today we have a brand new buy signal. This is the first day. It is, or actually, was in progress. We need to close higher on the day. And we are now down 3 ticks, hardly anything. Corn, less than a cent. So just a minor move back to slightly higher than yesterday's close would qualify. But if this closes lower than yesterday's close, this will disappear, the signal will disappear, and we have no signal on the close. But right now, keep your eye on it. Wheat did exactly that just a few days ago. Had a bullish engulfing, not super convincing looking, but that's a judgment call. And code doesn't know judgment, except for IA. So anyway, we're long ER1 overnight and ER3 overnight. Bought it on the break the next day after the signal day. And again, the signal was July 31st, the last day of July. So far, so good. It's not up a lot, but it has made a higher high. Looks like it's going to have a new high close. I'm expecting at least, I hope, a rally up to 554.5. But the problem is this is still a long-term bear trend. Is this all three of these signals? And that adds to the bullishness somewhat. A good signal from a longer-term standpoint. Next, cattle. Oversold, bouncing a little, probably up to the resistance zone. But here we go with hogs. We may have, and I'm talking about this the day after the possible shoulder low, a head and shoulder bottom. I'm sorry, I see these patterns all the time. I'm really good at it. I've been watching them for 50 years. Short term, that means maybe it took 5, 10, 20 minutes. Everything up to one, if I remember correctly, it took 10 years. I think it was the dollar index a long, long time ago. Anyway, level of the shoulders is about right. The timing couldn't be more perfect. If you take the second low of the two lows, which I think is like 2 ticks higher than the lowest low, and I like the second one just because I like it. It doesn't matter. And I measure from the first shoulder to the second low at the head, I've got the exact same number of days from this low here on June 14th to the second low of the double bottom head to yesterday. Perfect. Symmetry. Neckline almost exactly flat. Perfect. Rallying today, first day after the shoulder low, what you're going to see is a move up to or close to the neckline. Then there's a possibility of a small dip down, but not lower than yesterday's lows, probably not even halfway down. And that does not necessarily have to happen. We could just rally right up to this neckline and blast through it like a hot knife through butter. That would be classic, with a gap maybe. And the minimum upside objective is a test of the top of the market, which we got a sell signal on, of course, on April 9th, right back up to the highest high we've had this year. Wow. Keep your eyes on hogs. Back to the E-mini, and you can go in just a minute. A little bit more strength, but not much. Going sideways to maybe a squeak lower here in the last few minutes, changing from a 15-minute chart to my 1 minutes I watch a lot. So yeah, it's just dribbling back a very slight amount. You have a great trading day. Profitable trading to you.